Well, I may as well pick it up from where I left off last night, given things have moved pretty much in line with what I was expecting. So equities came off. So as I said a couple of weeks ago in here, that this little bit of a topping pattern had come up and retested it. And I was saying keep an eye on this as it coils because it's going to break. I said I thought it could break either way. Well, I said normally these things break against the parallel unless they're a bit more like that, which is what it turned out to be. And anyway, so it's broken down. I guess that's what's happened. So on a 4-hourly basis, so it's had this little flag pennant, I guess whatever you call it, where it broke down, came up, formed a bit of a channel. It's broken down, looking pretty weak. The divergence on the waning momentum on the 4-hourly isn't looking so good. So that's the S&P. I suspect it's going to weaken further. I think as I pointed out a couple of weeks ago, one of the tells for it was on the weeklies, the Bollinger Bands. It was outside it here, which doesn't happen very often, and it does. It comes out, right? But not very often, right? And it really has a bit of a either consolidation or a pullback. Like here's had a bit of a pullback as it gets back inside those standard deviations. It doesn't stay out for very long, which is the case here. So it's totally to be expected, as I said. Look, that's that's the equity risk. Again, being short the S&P, it's tough. Like I've done it. Hit and miss. It's hard, right? Particularly trading from Australia because you're up in the middle of the night if you really want to watch it. So I've been trading the Aussie futures. That's where I've been short the equity risk. So it's reasonably correlated, not completely. You kind of had a bit of rally down the back of iron ore. Iron ore was up at 6%, but still under $100. And it's come back. I still think it's looking pretty weak, and this long-term trend is looking in danger. There, a bit of a red line of sand there. I guess the really interesting one, of course, is gold. Classic. Look at that, when it was kind of up here. When it broke at 834, a lot of people are going, it's off, it's going to like 10,000. Honestly, some of the people that calls on gold is just like ludicrous. As I've been saying for like quite a while now. This run up was because yields were dropping. The 2 yields had a peak here and a bottom here, right? Inflation expectations were coming through, and towards the end there was a flight to safety because of COVID. All those things had disappeared. So when this inflation number came out here at 5.2, all the smart money was saying here, as rates are coming down, we're going to get, guess what? We're going to get inflation. Of course it goes up here. We get inflation here, and people going, oh, inflation's here. We better buy gold. I said, look, mate, this is the dumb money. The smart money was here, all right? Similar story, like back, in 2011, right? When, there was a run up to gold, same kind of pattern, run up to gold on the back of yields dropping. And sure enough, what happened here, right? That's when yields started to turn up, right? And we look at, what happened here, right? Guess what happened? Let's look at the yields, right? People who are looking at gold without looking at interest rates, they're just full of shit, right? They've got no idea. This is what happened. We had a big spike up in the 2-year yields, and of course, what happened to gold? It dropped, right? Now, the interesting thing about this, right, is there is some very technical stuff going on here. Very clear break, like here, right? Now, the interesting thing about this level here, when I zoom out, right, you can see that it has broken through this level here, around about 55 points, it's broken through, right? I think, as I said, when it breaks through, it's going up here. Right? It's got like another, could have like another 100 points in it, 150 from where it was down here, got another 100 points in it. These gaps get filled, right? This one is going to get filled. How is that going to go for gold? And look, we've only just started, right? So we've just had this little move here. Gold has come back. These yields are going to keep on moving. What's going to gold? It's going to tank, right? I'm short these 2-year bonds. Being short those 2-year bonds, it's like being short dollar gold, but it's kind of easier being short the 2-year bonds because it's just less volatile. You get less of the idiot factor of these people just thinking gold's going to go to the moon, right? You never know, it might, right? There's other factors apart from the 2-year interest rate, but at the moment that's kind of the dominant thing, right? But just as in here, people are saying, when it broke through this level, this 1834, said, oh, it's filling in this gap here, right? I mean, compared to the gap in the 2 years, that's nothing, right? So this thing is looking like it's going to go south pretty quickly if those yields keep on moving. On the currencies, so I've been short still short the Aussie. It's still a bit of a risky short at this level here. I've been shorted. I was short here, wrote it down, jumped around a bit in there, short again here. I've been writing it down. And it is really, it's looking pretty tenuous, and given some of the moves that have been happening in particularly the euro and I guess more recently the yen, and that's flowing through the dollar index, it's not looking good for the Aussie. I think it's going to go down to this level here still, and it looks like it's on track for that. Let's have a quick look at the dollar index. Look at that, very strong. Why is it strong? Look at the euro, because all these markets, they're all linked. Look at this, that's really fallen off a cliff. That's a big fall when it broke that 115 level. I reckon it's going down here. A lot of people are saying like 112 is the target. Look, do it down there, 111, 112. I reckon it's going even further when you zoom out on a longer term horizon. That's the level that it broke. Where is it? I mean, there is a level in here where it could go to. That's that 110. There's a further one right down there, 106, where it could go to as well. It's, I guess maybe you could say there's something in there. That's a bit of a stretch. Here, certainly there's a big trend there that it's been trend lines pulling back to. That's kind of 110-ish. If it takes its time, 110, something like that. I think I'll leave that line in there. That's looking pretty good to me as far as a technical level. Oh yeah, that's beautiful, isn't it? It's almost there. So a little way to go there to back test that that line. And maybe the change in the dollar rate story will help the dollar overall against the euro. It's a bit tricky, that one, to tell how that one will unfold. Anyway, so that's the markets. As I said, I think the main one really interesting is gold, because so many people have been talking about it, and they were talking about that line there, and that 1834. People were looking at this trend line here, saying, oh look, it's all over. But when you have a spike like that, you do need to wipe out the noise. This one is the weekly, and you can see it's based on the weekly. which you can see more clearly here. You know, touch, 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 touch. That really is the trend line. Similar to this one, touch, 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 as opposed to, I think some people kind of drawing it through there. You know, like that's a stretch, right? There's a floor here. There's another one in here, like that one. You know, boom, boom, comes back, a bit under it, stays above it. It is a bit of a messy chart, but as I said, this run up and then the flag to break against the horizontal with rates turning, that really is straight out of the playbook of, you know, back here. Exactly the same formation, same thing was going on in the 2-year yields at the time. Look, if you're long gold, I'd be nervous. If you're short, I'd hang on. I've been in and out of gold. I stopped myself out when it kind of broke above that 1830 level. I haven't got back in yet. It fell really quickly. That's with these moves. So I haven't got back in yet. If it has a bit more of a pullback, I will, but I'm sure those 2-year bonds, so I've been making money on the same macro move anyway. Look, that's about it. Frankly, I think I've been picking it like a nose, ladies and gentlemen. I'm quite happy with that one. With gold saying I was sceptical about that move. With the US saying there's a short-term topping pattern in here, in the equities. With that saying it's going to break, which it did. And then saying watch the coiling here, that it was going to break, which it has. False break up. Break down. So I'm pretty happy with the bonds. They've been short. They've been going all right. The gold in the 2 years, been making money in the 2 years. Would have been nice to make money in gold as well, but you know, can't have everything. On the currency, been making money in the currency because it's been short. So all my positions have been going okay, and short the Australian market. I mean, from a macro point of view, which is kind of what I am, like a macroeconomic style, you know, kind of trader, they're all similar risk-off kind of propositions, right? So risk-off, you know, dollar index up, bad for gold, bonds off, equities off, you know, currencies like Aussie currency weaker. They're all variations on the same theme, and it's all been coming to fruition, which fits my macro view. So this technical analysis, really it is, I guess, a bit secondary to the macro economics, which I'm trading off the back of. Hope that makes sense. All right, have a good one. Hopefully I can pick a nose again in a not too distant future. But as I said, I'm short equity risk via the Aussie market. That's been going all right. Short the Aussie dollar, which is like being long the dollar index. That's been going all right. Short the bonds, the 2s, the 3s, the 10s in Aussie and US markets. They've been going okay. Didn't make as much money off gold as I wanted to, but as I said, been called that okay and been making money off the bond move, which I've had the thesis that's been driving the gold price. Anyway, that's about it. Have a good one. Catch you later. Ciao.